We think that the world financial markets are gradually transitioning to a new global macro regime, which has in fact three key attributes. First of all is the all-time high record amount of debt in the global economy, in the global financial system. Based on the latest data from the Institute of International Finance at the end of 2024, there was approximately 318 trillion US dollar of debt in the world economy, accounting for all key economic agents, governments, corporations, and households. And this figure on the relative basis to the global GDP was approximately 330%. So literally, the world is now drowning in debt, which has negative consequences for the potential structural economic growth. That's the first attribute of the global macro regime. The second attribute, in our opinion, are structurally higher interest rates, policy rates of central banks and government bond yields and corporate bond yields as well, especially due to somewhat higher and sticky inflation, which at least in the United States will not be coming down to the 2% Fed's inflation target anytime soon. And in this regard, connected to that is significantly elevated macroeconomic volatility. Key macroeconomic variables are and will be much more volatile than in the 10-15 years since the global financial crisis, when key central banks were carrying out huge amounts of quantitative easing. And last but not least, the third key attribute of the new global macro regime is extremely elevated geopolitical and economic uncertainty, driven by fairly to say, big military conflicts across the world, and now since the 2nd of April at least, these trade wars driven by the new U.S. administration. So in total, taking into account all three key attributes I've just mentioned, we think that investors in the upcoming years will have to be much more flexible, taking care, structuring, positioning their portfolios, and at the same time there are voices starting to appear that the traditional setup of 60-40 portfolio, 60% stocks, 40% bonds, might not be in the upcoming years the best investment solution. We at Conseq Investment Management have been recommending our clients to have at least some allocation to alternative asset classes like real estate, private equity, or private debt, venture debt, basically, as we think that the diversification will be needed now and in the upcoming year than ever.